Welcome to the Building Materials Sales and Marketing Podcast, presented by Mark Mitchell, a sales and marketing consultant who specializes in helping building materials companies overcome difficult sales problems. Mark is the author of the book Building Materials Channel Marketing and a frequent speaker at industry events.
Hello, this is Mark Mitchell from Wizard Strategy again. I've got another great guest today. I have been running into people from outside the norm, but of great interest to many people in the building materials industry. Like many times I'm interviewing a contractor, a builder, an architect, a distributor, somebody like that. But another big important part of running your business is, I'll call it the financial part. And now along comes this idea of investment or investors. And so I recently got to know Shane Parr, who's the managing director of TGP Investments, who is an active investor in the building materials industry. And I got to talk to him, and I said, "Wow, would you come on and on the podcast? Because I have a lot of companies I deal with, either who are looking for investors." And I thought, let's give them some answer some of their questions and give them some guidance. I thought that might be very valuable. And so I'm glad to have Shane here joining us today. So Shane, welcome to the show. And please tell us a little bit about your background.
Well, thank you, Mark. Thanks for the opportunity to join you on this podcast. My name is Shane Parr. I'm with TGP Investments. We're a small middle market private equity firm here in Kansas City, Missouri. I've been in the private equity business for 25 years. And primarily focused on lower middle market companies between revenue range of 10 million to 50 million in revenue. We focus on primarily manufacturing companies. And as Mark said, I've had some significant experience in building products. We owned a company called DaVinci Roofscapes for 12 years. And also more recently, we made an investment in a solar marketer and installer called SunPro that ADT acquired from us last year. But other than that, the rest of my career is primarily lower middle market manufacturing companies. So I've seen a lot of change in 25 years. So hopefully I can provide good perspective to other building products companies or entrepreneurs out there.
Great. Well, in my experience, I come across two types of people looking for an investor. And one is the smaller, newer, I'll call it startup type of company. And then the other is a company where, say, the owner is ready to retire or looking for a way out or whatever, just wants to move on. Those are the two types. Now, we start with the first one. You mentioned a range of 10 million to 50. So I frequently come across people with the world's greatest idea. And sometimes that's all it is the world's greatest idea. Sometimes they have a name and a logo and a website and a product, and maybe they've made a couple of sales. And of course, it's the greatest thing in the world. Now, the first thing is you're looking for somebody that's further along than that, correct?
Correct.
And if I were that person, what advice would you have to me if I'm I've just invented the world's greatest new way to heat a house or something, and I don't have the money to, let's say, get it up and running. What advice would you as an investor give to that person?
There's so many different areas of venture capital, startup investing, venture capital, which is really what you're talking about. And then as companies get a little bit larger and a little bit more established, they would become what we call private equity investment opportunities. Okay. But for a startup, very small business, an idea, it takes a lot of time and commitment by that entrepreneur to start that business and capital. First of which is, maybe start with your friends or your family who have some interest in making the idea or company. The further along you get, the easier it's going to be to raise additional capital from investors. A lot of cities also have often free clubs, like an angel investor club, or a community college may have an advisory group that's a service to the county or the city on how to build a business plan, how to raise capital, what are investors looking for, that sort of thing. The other thing to think about, if it's a patentable idea, is there a local lawyer that works, with patents that can give you some feedback in terms of, is this patentable? Is it worth patenting? Should I do this first before I raise the capital? That sort of thing. There are a number, like here in Kansas City, there are several startup angel clubs, investment entities that focus startups or, the second round money or venture capital type investments. So I would definitely say, if you're looking for capital, try to seek out those sources locally and, use it as an education process, not only to see how others are doing it, but what it takes to bring on investors. Who are those investors? What can they bring to the table? A lot of times what I've seen is an entrepreneur or, has this vision that their business or their idea is perhaps worth a lot more than what the market is willing to pay or values. And it's important to have perspective. And the only way to have perspective is to talk to multiple people who actually fund or work or operate with those type of transactions. The other thing that I would say is, you really have to be open-minded when it comes on to taking on a partner. When you're that size of business, the key questions you should be thinking about is, does this partner have the money or firm have the capital I need? Do they have background and really understand my business? What can they do to help me be successful in terms of additional resources they can bring to the table or other things that they can help? Now, a lot of times an inventor will have a good idea and is great at maybe designing products or engineering ideas and coming up with a strategy, but they may not be the best people to execute that strategy. And so, you have to be open-minded, to the possibility of, as well as having somebody come in that actually has experience running a company that you're trying to build or have built, because that's not your skill set, that's theirs. But, generally, if you verse yourself and you have good perspective, and you've done your diligence and partner with the right people, you're trying to build a partnership with your investors and your board to create an atmosphere and environment that's going to help the whole enterprise be successful. So you have to think about, not only the cost of that capital, but what do I get, for that? Yeah. And market, a lot of times it's, they've never done this before. They've never sold their business. They've never tried to raise capital. They worked in an industry forever, and then they, maybe they had some free time and they come up with this idea and they wanted to give it a shot. And so it can be frustrating, but, network, and just try to, talk to as many people and get good perspective.
Yeah, that's very helpful advice. The other thing that I see is that they may also will frequently underestimate how much money and effort it will take to scale their business up to where it needs to be. And so they don't realize literally how much money it would take, how many plants maybe do you need, so forth, what kind of staffing do you need, so forth, that they can underestimate those costs. Let's jump over to the type of business that you're interested in. And so can you give us some parameters? Like you mentioned $10 to $50 million. What are some other parameters? Like is there a time they've been in business for so long? It's not, maybe it is or is not a commodity product. What kind of parameters, broad parameters are you starting with, Shane?
We start with, the size range, just, to give somebody an idea. Generally, we want to see companies that are at least, break even or profitable. We're looking for companies that, have a unique offering, a differentiating service or product that really commands a pretty good price. You're not fighting over, commodity, and it's not price sensitive. You're solving a problem and you're bringing value. And so typically we want to see companies with gross margins at 30% or higher who are operating either in a large market or the addressable market is large, and there's lots of room to grow either through market penetration or geographic expansion or maybe through acquisition. And so a lot of times we're trying to think about how we put together a strategy where we're helping, a small business, say that's 10 million that has aspirations, maybe to be $100 million company. Well, how do you make that work? And what's the strategy, and is it valid? And, those are the types of opportunities generally that we look for. And I know that's not this nice, neat, little black box where, hey, I meet that criteria or I don't. It's very subjective. But, we're looking for an ability, to scale and really grow. Totally focused on growth.
Shane, what is, in your experience, what has motivated the owner to be interested in investment? Whatever they come to realize, or
there could be any number of reasons. Sometimes they'll be in a situation where they have partners and they have one or two partners that maybe want to cash out and they can't afford to buy them out. Sometimes it's the founder owner is the CEO and he wants to retire and he just wants to sell the whole thing. Or it could be, they've grown a company to so far and they need a capital partner to come on and help them continue the growth. Similar to our experience, with DaVinci Roofscapes. Back in 2006, we were approached by the founder who needed a partner to help scale his business, which was about $8 million at the time, here in Kansas City, operating in one plant. They manufacture plastic synthetic shingles for the high-end residential market. And, that business requires quite a bit of capital. For every 10 million in capacity, it requires about 3 million plus in capital expenditures. Definitely needed a capital partner, but he also needed somebody that can maybe help assess what it was going to take to grow. And a lot of times that's bringing talented individuals into an organization that have a skill set that one founder entrepreneur, does not have. My old boss and mentor used to tell us and teach us that a lot of these companies are going through what he termed as corporate puberty, and it's very true. The skill set to go from 0 to 10 million is a very unique skill set. The skill set to go from 10 to 50 million in revenue perhaps is a different skill set, because you have to delegate a lot more responsibilities to capable people in functional areas as the CFO, perhaps a VP of sales, somebody to run the manufacturing operations, purchasing, and other functions. So what we see is, a lot of founders, entrepreneurs, they make all those decisions themselves and they grow to a point to where they become limited because they only know what they know and they don't have the bandwidth to go take on 4 new markets or execute their growth strategy. And so a lot of times we can come in, with the perspective that we've had, helping companies think that through and growing. And it's, kind of the philosophy, well, the more, smart people, that can give us capabilities and be on our team, the better off we're going to be, and the bigger the pie is going to be for everybody. So everybody's going to win. And so a lot of our strategies really are HR strategies, where we're coming in, we're assessing a company, we're assessing the growth opportunities, we're looking at the management team, and we're pretty honest, about, in our view, we think it's going to take this, or we agree with your strategy, but, maybe you just don't have all the people you need on your team to execute. So we're real big on making sure we have capabilities everywhere, providing the capital that they need to grow, thinking long-term about how to be successful. In the private equity business, you don't have a whole lot of time. You have about 5 to 8 years, from start to finish. And that's long for private equity. A lot of other private equity firms have a very much shorter window, but we try to own companies, between, that period of time, because it just takes that long. A lot of times, you might get from point A to point B, but how you get to point B isn't the way you thought you got there when you first got involved. It's a journey, and you've got to evolve. But it all comes down, in my opinion, to having good people on your team who are motivated and incentivized to work together, to a common goal to achieve over 5 to 8 year time periods.
Is this just educating me and some of our listeners here, we're using a term called investor. An investor could invest in 1% of a company, or a controlling interest, or 100%. Do you have a parameter where,
Sure.
like, we're looking for companies we're just going to buy and own 100%, or how does that work?
Primarily, we're going to make a control or a majority investment, own somewhere between 70 and 85, 90% of the company. We really like it when we can partner with an owner or manager who is willing to keep going forward and bring us on as a partner and an investor. And so they retain significant ownership. That's important to us. But primarily we're a control investor. There are other investors out there that may take a minority position. We've done that before, but that's not our primary focus. Generally, we're making investments between, 5 and 10 million in any one company. And so generally, given our size range, that's a control, or majority control investment. But we have done some minority. There are a lot of people that focus on that, not as many funds. There's a lot of individuals that do that. It's just different. You're not in control. You're making a bet in somebody else, and you don't really have a say, and so, or at least a significant say. So it's just a different. But we're primarily focused on majority investments. I
have a $10 million company, and I think, and you think, that it can be a $100 million company. When you make an investment, am I going to be paid for getting it up to 10 million, or am I going to get something that recognizes the potential that it can get to 100 million?
Well, if we all think, we've got a $10 million business that can, grow to 100 million, I'd say that's really exciting. And we're fortunate to find those type of opportunities. I think when it comes down to, valuation and looking at a business, you got to look at, where the business has been, what the opportunity is to get from 10 to 100 million. How viable is that? What is it going to take to be successful? Do we have the team in place to make that happen? What kind of capital needs are we going to have along the way? What kind of structure do we need to put in place, or capital that we need to think about to achieve those goals? So there's a lot that goes into it. I get asked all the time, what are the multiples that folks are paying? And if you don't know what a multiple is, a lot of businesses and most businesses trade in the sector that I focus on a multiple of what is called EBITDA, which is earnings before interest, taxes, depreciation, and amortization. The market will tell you, companies, sell between a multiple of X and X. Today's world, maybe those multiples are coming down based on, everybody's view of the stock market and perhaps a future recession. But, over longer periods of time, there's a range. So, we just can't say, okay, your business is this size, this is the multiple that we're going to pay you, because it's a function of what we think we can do with the business, and having perspective of all those things that I outlined. You have to have that perspective before you have some perspective on valuation. So in some cases, we may be willing to pay, 9 times EBITDA because the business is growing so fast and it warrants that. And if it's a slower growth company that there aren't a lot of growth opportunities, maybe it's a 5-ish type multiple in terms of valuation to evaluate the business. So how much money does the owner want to retain personally, or what are their objectives of the transaction? Are they just trying to maximize their value and retire? And then they're going to be looking for the highest price if they're going to, perhaps, or are they going to retain a significant ownership percentage and continue to grow? Then they may be looking for other things.
Yeah. After listening to you and also just my experience, years ago, I got to hear a really smart man, Dr. Aziz, who wrote a book called In Pursuit of Prime, and really just stuck with me. And I see it today. A guy graduates from high school, and you ask him, he's 18 years old, and you ask him, if things work out for you, how much money do you make a year? And he doesn't plan to go to college. And he says, $80,000 would be amazing, and I might be able to do that, but that would be great. And then he decides he goes to work for a roofing contractor, or a plumber, or an electrician, or a drywall contractor. And And one day he decides to start his own business, and he's still in his 20s. And all of a sudden, he's in his early 30s, and he's now making $200,000-$300,000 a year as the owner of a contracting firm. And he starts to go, oh, wait a minute. He looks down one day and says, oh my gosh, I'm making so much money. I can't change it. I don't know exactly, kind of like what is that game, Jenga or something. I don't know all the pieces that got me here, but I dare not move anything because that'll be the piece that collapses it all, right? Mm-hmm. And I think there's a lot of building material manufacturers that many times I find that they are a smart engineer type who just saw there's a better way to do this. And lo and behold, the thing takes off. Usually nowhere near what could be, but it takes off. Maybe they're making more money than they had thought possible, and so they then either go into that kind of I've got to protect what I have and can't grow or risk or take anything, or the other is they look and say, gee, even if I'm making $1 million a year, I could make 10, but it's like, oh no, I can't think that way. Or look, from talking with you, Shane, it seems like I think there's a number of manufacturers that are in that $10 to $50 million area, that the parameters you discussed, but they on their mindset they're not familiar with the world of sophisticated finance, I'll say. They know how to go to the bank and get a loan, and they know what a credit card is, but and maybe give credit to some customers. And so they don't know it, but they assume that they do. They assume like, well, I wouldn't want to sell the business because these bad things would happen, okay, or I'd miss out on this. And so they don't take the time to say, well, what if we just go look at this? What if we just checked it out? What if I opened my mind up a little bit and just looked at what might that look like? And what kind of picture does it look like? Because many of these people don't want to just get a big check and ride off in the sunset. They're part of what makes them tick is what they do every day. But there's a lot of parts of that as the business has gotten bigger that they hate doing. Like there's some parts of it that they really love doing. They're really good at it. And then there's some parts they're not so good at it. I guess that what I'm taking away here from talking to you is I think there are more, just using the word manufacturers, but it could be a distributor, it could be many different types of companies in the building materials industry, that they've hit a plateau and they're probably not going to break out of it. And if they had a desire to, or wanted to see what that might look like, they should talk to a firm like yours to just take a look what it might look like. Is that a good piece of advice? Or
no, Mark, absolutely, and I think you hit the nail on the head. There's a lot of very successful companies that have grown from 0 to 20, or 5 to 20, or 5 to 30, and they, the owner, founder, CEO has done exceptionally well, and they're making a lot of profits, and they reach a point to where the same risks that they took to get there, they're not willing to take anymore because they don't want to upset the profit stream. And, a lot of times we see that in a lot of different businesses. And, what a firm like TGP or myself or other good private equity firms, they're gonna see the opportunity and be able to help understand, what the growth opportunities are, and maybe they're willing to share that risk. Maybe they buy, an interest in the company, and the owner retains an interest, and they create a partnership for how they're going to work together. But what we try to do is, assess openly, what does that CEO, what does that owner want to accomplish, and why? What are their objectives? Is it some diversification, but also stay involved and help grow? Those are great opportunities. We love to see that. We can try to figure out what kind of strategy makes sense. If you're going from 20 million and you have an opportunity to get to 50, generally you're going to have to do that organically or through acquisitions, and a lot of times organically. And what we find is it takes a really good strategy that makes sense, a valid strategy. It takes perhaps more people with other capabilities to bring into the business, which requires an investment, and a good board that can really help bring good ideas and support a team. And so we try to foster a environment of a partnership where we're going to bring capital, and maybe we don't know how to grow your business exactly, but We know the basic building blocks in general. You've got to have a valid strategic plan. You've got to have good capabilities in finance and manufacturing, in sales, and you've got to make those investments in resources, and you have to give it sufficient time to be successful. And everything isn't going to go the way you think it's going to go. You're going to have things that work better and maybe things that don't work so well. So you've got to be able to change course if needed. But a general philosophy is trying to build the best management team you can. The more smart people you can have on your team, the better off we're all going to be. And if we're all partners in this, and there's honesty and good communication and good governance, it creates an environment where we can be pretty successful. And in DaVinci's case, we helped grow them from 8 million to 13 years later, 65 million when we sold the business. There's other great examples like that. The playbook sounds simple, but it's really not. But it's good people with good resources and time, and making smart long-term decisions, being open-minded.
Well, two things come to mind, Shane. One is, if you are the owner, founder, inventor, you're pretty confident in yourself, and you may not have people around you who are going to challenge your thinking. You've got a lot of people that will just say, go along with what's happening. Because I will get hired by companies many times, and I can, it's real obvious where the weak points are, what the company needs to do. And I can see the staff is like, we've been trying to tell the boss this for 5 years. I'm glad he's finally listening to somebody. Right. And it's just, he wouldn't listen to them, right? That's a challenge. And then the other one is, if you are a certain size, you are at risk. And, you get to be the market leader, you have a lot less risk. It's harder to unseat you. It's harder to change things. You've got the assets and teamwork and people to be, let's say, innovating, adding new features and programs and things to keep yourself out there competitive. And building materials is a business that, while it's gotten better recently in its willingness to try new things, it really is still very conservative and doesn't like to change. So if there's a product that is the leader, like I'm working with a company right now that literally they would eliminate the need for a product, but this product is just what you just use. You don't think about it. But it's kind of like we're building some buildings today with belt and suspenders, and we don't need both, and we shouldn't be spending the extra money for both, but that's what we're used to doing. And so when you are in that, certainly when you're very small, a startup, it's very risky that, it's a great chance you're not going to make it. Then as you get a little bigger, you may start to feel secure, but actually, you're quite easy. Someone can come out of the blue, either knock off your idea or come out with a better idea, and you will be easier to, let's say, unseat than the leader. And so I see companies all the time that have a great idea and they get to a certain size, but if they don't get like national distribution, if they're not available everywhere, like as soon as possible, they are at risk of losing it. And so I think that's another reason to look at perhaps looking at working with an investor to literally protect the future of your company, because you could have what you think is a very successful $10 or $20 million business, but it's really at bigger risk than you know.
Yeah, Mark, I think that's a great point to make. When you were describing that, it reminded me the time we spent with DaVinci here locally, being a product, back in 16 years ago. The synthetic roofing market was very small, and there had been a lot of failures historically. And so getting people to adopt the product and install it and buy it, particularly given the price points we were at, was difficult. And we grew, but we grew very slowly. And we reached a point, as a company and a board, and we just realized we just really didn't have the capability to scale the business with the personnel that we had. And we were fortunate enough to bring on a great executive that had executed in the building products industry before and help, take a company and a product line national. And he was able to come in and give us great experience on, why a contractor would or wouldn't install our product or buy our product, and what it was going to take to be successful. And we were going to market with a lot of reps that were calling on contractors, but we could not get, their time, and we couldn't create a good incentive to get them to scale like we wanted. And we had a lot of turnover in our rep groups, and we realized that we maybe didn't have the right message and the right way to present our opportunity to contractors. And he was able to come in and alter our strategy, but also he had been successful historically executing it. And so there's one thing to have a great strategy. It's another thing to go execute it. And it takes people and experience. And he brought that to us and really helped us grow from, a $30 million business to a $65 million business in a few years. And to give him a lot of credit to really helping us get over the top.
Excellent example. Yeah. Hey, well, this has been very helpful and informative. Are there any other things that words of wisdom or anything you'd like to offer to building material companies?
Well, it looks like we're going through a pretty interesting market out there. Everything goes in a cycle. And I could say, if you're looking for an investment, whether it's a startup or a more established company, make sure you spend the time to understand, what opportunities are out there. How do you go about finding the right partner? Make sure you talk to a lot of references if you like a partner that you're considering working with. It's similar to getting married, when you're going to make an investment with somebody and you're going to be a partner for 5 to 8 years. So you better get to know each other pretty well, make sure you're on the same page on a lot of things. And it's really just time and talking and having a philosophical understanding of the direction of the company and how to get there. And it's a lot of fun. I really enjoy helping companies grow and become successful. And I really, what makes me probably the most happy, it's financially lucrative, but it's watching those companies go beyond us and building those teams up so they can continue to grow and be successful. And we focus on growth. So a lot of our companies, we're doubling the employee base, over our investment time period. And, I think that's only good for the economy and good for those employees and those management teams.
Oh, that's great. If someone was interested, do you have a website or something people could come and learn more about your firm?
Our website is just tgpinvestments.com, and my contact information is on the website, and they can reach out to me. I'd be happy to help them, if I can.
Yes.
And I think there's an overview of the type of investments and some of the historical deals that we've done and some background, but happy to help, if I can. I'd say, there are a lot of good firms out there. And so, whatever you do your homework and make sure you find a good partner that you're comfortable with.
Great. Well, thanks again, Shane, for your time today. It's been very helpful, very informative. I know I've learned a lot. So hopefully the listeners have also learned a lot here to help them think about their own futures and the future of their businesses in terms of when they really want to grow them. So I think this has been very helpful. So thanks again for joining us.
Well, thank you, Mark. I appreciate it. And thanks for all your help. And this has been fun. And we'll see what happens over the next year or so. It should be interesting.
Yeah, it's going to be an exciting couple of years, I think. Yes, you're right. But thank you, everyone, for tuning in. I'm glad you're here. Hope you got a lot out of it. And look for our next episode next week. And please let me know if there's a subject that you would like me to cover. And I hope I will see you at the Wizard Summit this October in Boulder. Take care.
Thank you for listening to this podcast from Mark Mitchell on building materials, sales, and marketing. We hope he gave you some fresh perspectives on how to grow your sales, and will listen to future episodes.